let's look into the detailed explanation of our accounting equation. And let me remind you, and that will be assets equals liabilities plus equity, and plus equity. Now we already know what the assets are, and let me just write it to remind you guys. That's going to be expense, for example, cash. We will have supplies, that's a short-term asset, inventories, and long-term assets such as land, buildings, and so on, yeah, etc. Now, in case of the liabilities, if you remember, that will be anything that we owe to our suppliers, for example, accounts payable, that's going to be one. Anything that we owe to our creditors, that would be notes payable. And if we owe to our customers, that will be unearned liabilities, unearned revenue. Yeah. And as for the equity, we're going to have two major components. One of them is investments made by the owners. The examples of such would be simple invested capital. We can call it common stock. In some cases, the same thing is share capital ordinary, yeah. Yeah, so these are some examples. And the second component of the equity is retained earnings. Now, retained earnings is basically the net income or profit, minus dividends. Yeah, dividends. So this is the simple formula of retained earnings. And we already know that net income is specifically revenue minus expenses. So using all of this information, we can sort of expand our accounting equation to show it in full picture. So we have assets that is equal to liabilities plus all of the components of the equity. Now, let's put it this way. So we have to add here investments plus, now we said that the second component is the retained earnings, which is right here. Now, retained earnings is revenue minus expense minus dividends, and I can just write it that way. Yeah, so that's going to be revenue minus expense, which is, yeah, net income, and minus dividends. So net income minus dividends, that gives us the retained earnings. Yeah, so let's just let it put it sort of this way. Yep, not really good at drawing. Yeah, this one is our net income. And net income minus dividends, that's going to give us retained earnings. So that's basically the expansion of our accounting equation. I hope you find it useful. And before we even move on, I would like to show a couple of things. So here we have a negative minus sign in front of expenses and dividends. Here what I would like to point out is that in fact the higher, so this is a note that I would like you to keep, is that the higher your expenses and dividends are, and dividends, yeah, the lower will be your equity. Now that's the opposite for investments and the revenue. So the higher investment and the higher the revenue, the higher will be the equity. But again, pay attention to the fact that if you have increase in expenses, it means decrease in equity. If you have increase in dividends, that means decrease in equity.